So in your videos, you mentioned personal credit cards to be around 80K is the sweet spot, but currently I have 92K of collective personal credit limits. And because my scores are rising, my personal credit cards are rising as well. Should I be concerned as I haven't done a stack request yet, and as I am in the process of sweeping my credit for the inquiries? So I think where you're at, John, like at 92K of collective personal credit limits on your primary cards is still a really good spot to be. Once you start getting over 100K, I'd kind of get to a point where I would manually reduce them. But one thing you could do, at least last time I called Capital One and had them reduce my limit from like 40K to 20K, they asked me if I wanted to opt out of automatic credit line increases. And Chase will ask you this as well. So if you have a 30K Chase card, you reduce it down to 20, they should ask you if you want to opt out of automatic credit line increases. So that's something I did with them. Maybe consider that. And I think where you're at right now, 92 is a good spot to be. And then let me expand on that even a little bit more. So in the scenario that one of you guys has over 100K in limits and you want to reduce them, because as I've been saying, I think the sweet spot is around 80 or maybe even a little bit less. 80K of personal credit limits from primary credit cards, not authorized users, but primary credit cards. If you are in that scenario and you're determining, okay, what cards do I reduce my limits on? Well, one, I would make sure you don't have over 40K at any specific bank, like I mentioned at the beginning of the call. And then two, you want to reduce limits first at your lower tier cards. So maybe you have a credit union credit card. Maybe you have an Elon Financial credit card. Maybe you have lower tier cards like that. Reduce those limits first. Like maybe Navy Federal gave you a 30K limit, which they do frequently. Reduce that 30K limit down to 10K. So start reducing the limits of your lower tier cards first, and then work up to your tier 2, tier 1 cards like Chase, Bank of America, Citi, Wells Fargo being tier 1, and then US Bank, Amex kind of starts filling in the middle there. But a higher limit on a higher tier credit card looks better on your credit report. Does that make sense, guys? Cool.
Yes, it does.
So yeah, John, any follow up on that, or was that clear?
No, that was pretty clear. I just didn't know whether or not that would be frowned upon, almost like closing an account. So I was like, all right, let me just, I can't stop these cards from recognizing that I'm getting the credit game down, and they're letting me know that they raised the limit after the fact. And I'm thinking, holy crap, I'm about to hit 100K. I have yet to follow through or follow up with the Chase. I about maybe 4 months ago, I opened a personal savings and checking account with them, so I know, and I'm getting a lot of mail from them. So I know as soon as I follow through, at least with Chase, I didn't want to. Well, thanks, but no thanks, because like you just said, they are a tier 1, and I don't have enough of them. Bank of America is my only one. The others are credit unions and local banks here. So I'm thinking, all right, what to do. So I think the reduce is a win, I would say, for me.
Cool. Yeah, I think you're in a good spot. And then if you get a little bit higher, just kind of monitor that and keep it under 100K is what I would suggest. And, first focus on bringing your lower tier card down first, and then kind of work your way up. But I think you're in a good spot. 92 is good.